Yo, what up, family? How y'all doing? I hope you're having a wonderful, beautiful day. So today we're gonna actually go into a little bit of, smart money concepts. Wyckoff, excuse me if I'm saying that incorrectly, but I do want to get into a little bit of how I trade. I used to trade pretty much retail when I started. Now I've learned to understand that there's, reasons why they go towards a certain area in the markets, and to really look for those reasons to go toward those markets and determine my destination of where the market's going, and also to use that towards, I guess you would say, a trending market. Myself, I don't really care for trend lines, but I do use a trend or a bias of a trend, but more or less understanding where the target is at. And then once we're getting to that, I'll just kind of break down a little bit of everything. But we pretty much are going to go over what Wyckoff is now known as smart money concepts, such thing as order blocks, imbalances, liquidity above equal tops, equal bottoms, double tops, triple tops. So stay tuned. We will have a lot to cover. This will be a little bit longer of a video, but there definitely will be a lot of value that I'll be putting out there. Okay. All right. All right. So we'll start off with this. I'm kind of going to just go over the basics of it. So pretty much with smart money, the things you're going to look for is open areas. So imbalance is going to be one of them. So all imbalances technically is when the market usually goes like this to make, higher lows, lower highs. If you've yet to see what higher lows or lower highs or any of the basics in the market, we do have a video also on that states, how the market moves in sequences. But so if the market does this, this is normally a move with a rebalance, move with a rebalance, move with a rebalance. So sometimes the market will have institutional moves, or you want to call them another name is going to be um, impulsive move, or just a big move in general where the market has yet to really, the market is more or less going to go like this, and then, maybe like that. But within this area, the market never really had um, the balance as if, sorry, as this one did here, where it's kind of break or retest. This one just has a break, consolidation, or what they call distribution, and then the actual move down. So we're gonna go into this. I'm just gonna go a little bit over the basic stuff, but I do want to pretty much start off on a daily time frame, because on the daily time frame is where I kind of use my idea of where, the destinations are. What I mean by that is normally liquidity is where people stop losses rest. So double bottoms like this is a double bottom. You also have things like up here on the smaller time frame, you have double tops up here. So this will be areas of where there's stop losses, and technically what the market's going to do eventually is go for those areas of liquidity or equal bottoms or stop losses in order to capture those stop losses and then forth to move towards another direction. Okay. So for an example, I'm just gonna go over, as you can see in my last one here, we'll just kind of start off with this. So by starting, you can see that there's two bottoms here. So obviously that's my first destination of target is what I'm looking for, because I know that there's probably people that are bought here looking for the long position to continue up here somewhere, possibly at a previous higher high. So let's look at this as a previous higher high, where this line is going to be at. Okay. So they've yet to come up to this higher high, because over here, there's also going to be stop losses. And if you guys don't understand what I mean, simply let's say someone bought from here, and this is just an example. Let's say that they bought here somewhere and that their stop loss rests above here. Now, normally they'll come up here to take the stop loss in order to move the market the other way. So they've yet to do that. But ultimately here is the same example, but in a bullish aspect. So someone probably bought here, looking for a stop loss here, looking up to that area, okay? So people probably buying from this area, looking to come up to here, but they know that there's people who probably have stop losses here. So they're gonna continue probably down here as they are right now to take these bottoms, okay? So let's go a little bit more into depth in the smaller time frame so you guys can see a lot more, not only just using the daily. So pretty much what I'm saying is my objectives are either going to be towards these two bottoms, objectives meaning which area I'm going for as a necessary of rebalance or necessary of liquidity grab. So down here or up here. At this point, since they're so far down here, I would look for them to come down here first before they come back up here possibly. But also keep in mind that there are more equal bottoms over here, such as right here. So this could be a overall big destination. And this might get, kind of like confusing to people like, well, man, should I go down here or should I go up from here? You really have to learn at this point, how you trade at a better aspect of, you want to buy low and sell high. So technically, once you come down here, you could buy up this way, but you definitely don't really want to sell at this area unless you really know how to trade by price action. Okay, so we're gonna go down to the 4 hour. So as you guys can see here, since we're looking for this area over here to come down to, but on the 4 hour, we also have the same type of, areas of where market can actually come up to. So being in this area here, imbalance is going to be an area of where price is imbalanced. It's not balanced yet. So as you're seeing here, the market had a very dramatic drop and it left this area open of balance. There's no balanced out. Now it did come back up to meet these highs here, but then also if I take this away within the imbalance, you'll see the same thing that's created as equal highs. So at the top of these two wicks, pretty much these are kind of similar equal highs. They're not exactly equal highs, but the point in that is if we have an imbalance here that matches the equal highs here, then we have a reason for them to come up here because more than likely the market needs to balance itself fully. Now it doesn't have to do it immediately. Price has no timing. It doesn't when it does it, but it's just an idea of, okay, where can price come or go in order before they move the opposite direction of needed, okay? Now, with that being said, there is another one that's smaller here on a smaller time frame between these two here. So this is another imbalance, and also what you'll see within this imbalance here, if I go down to like the 2 hour time frame, you'll see that there's equal highs here, 1, 2 here. So this is also the same type of area of this. So these match here. But what I'm looking for on a higher time frame is if they can come down here first for these equal lows here before we can get that move up here. Now, buying from this area isn't a bad idea, but I would rather wait for them to come down here before I head back up. Now, it's the only reason I say that is because I'd rather them do this continuation down here and then continue to start moving the market this way, ultimately all the way back up to here. So I had this thing, let me redo that real quick so we can see a little bit better. So ultimately what I'm looking for is going to be something of this like this. So I'd rather them come down here and move price, take this liquidity and then change the market this way to where they come up here and then eventually end up all the way up here, okay? I'd rather see this formation than them do this here. Because once they start to do this here, then my bias kind of can technically go towards bullish because they might come back down this way, which is a possibility. I can't get that out of, the opportunity that might occur, but I'd much rather than take the lows to come up to the highs than, come up to the highs and then take the lows and then come up to the highs. I can't predict what they're going to do, but it's just my ideas and my preference towards what I'd like to see versus, what I wouldn't like to see. But that's, kind of how I look at, just preparing myself for the market and where they can create imbalances and, double tops, liquidities, things of that sort. So with that being said, currently with this one, what I want to do is kind of go into a lower time frame so you can understand where, like why I looked for this. I actually caught a sell last night here, and I'll mention too as why they sold it off here. You can see on a lower time frame. So being that was my bias towards bearish to come down here, I was looking for them to actually run up into this area. As you can see here, there's somewhat of an imbalance right here. So I was looking for them to come here, but this necessarily wasn't need to be met, even though they left this open here on this time frame. On the 4 hour, you'll see what they really did. What they did is rather than closing this in here, they played off this singular candle because technically this last bearish engulfing was enough to retest this here, considered like an order block or area of order. As you can see, if I rectangle this off right here, where this is pretty much all at, here it's consolidation. So if we go down the 1 hour, you'll see that it's pretty much consolidation. So there is multiple, names for it. I don't know all the terms exactly, but search is Wyckoff. I believe this is going to be redistribution. So they're distributing sell orders before they take the highs to take the people that sold here with these equal tops. So as you can see, there's equal top here, and then they continue the bearish move here. And then they don't necessarily need to come back into this because, like I said, they already took the highs here, and more than likely they're going to leave this for a later time. But as you can see, they came here, they stopped off of this area of consolidation, okay? But then what you see here is, like as they took liquidity with these two tops here, you'll see within this area here, what they do is they go to the lower time frame and they simply create a big high orders of distribution in order to take the highs within here with these two here to continue to sell. So we'll go down to the 15-minute here. And as you can see right here, what they do is they come up, they retest this. So another thing to look for is called order blocks or smart money cubes. There's so many different names for them, but pretty much it's going to be either the last the up bullish looking candle before the bearish move, or the last bearish candle moving upwards. Okay, as you see those, the last bullish, bearish, bullish. Here it's the opposite where it's bullish to fake out bearish. Okay, so what they did was they played off of this candle, and normally they'll take 50% of that candle like this. So if I'm going to use the 50%, I don't have my 50% on there, but as you can see where the 50% of this wick's at right here, if I put a line through it, pretty much matching up that, and I delete this, you'll kind of see as where they reference to actually, have to respect it, okay? So you see how the blue line matches up directly with kind of where they respect it here. Now, that's where they needed to come in order to use this as a resistance, I guess you would say in a basics trading, a retail trading. So they came up here to touch this, and then what they did over here was they did the same exact thing as they faked the bullish move before they actually ran the bearish move. So people probably have sold from here, looking for pretty much that same area of this being the next high. Oops, I had the wrong one. That was backwards. I apologize. Okay. So people probably sold here at this top, this last move here with the very tight stop loss back to where that was here. And even if they didn't, what they also did was these highs over here take that stop loss, but also if they sold off of this last move here, so I don't want to put the thing over it because you won't be able to see it that well, but okay, that's how we're gonna do it. So where these two tops are here, like I spoke upon double tops, these are double tops on a lower time frame. We got a high here and a high here. Now these two tops are ultimately taken out by this wick here on this candle. Okay, so with that being here, people might have sold down. So let's go to the lower time frame. We'll go to the 5 minutes so we can really see what they did. So as you see here, these are all those even tops that I'm talking about here. So people probably sold here with their stop loss right above the tops here. This is probably their stop loss right above the last previous high. And then what they do is they fake the bearishness, the bearish move, in order to take the highs of these previous tops and then move the market this way. So what they did was they created liquidity, double tops right here, in order to push the market down after they took the tops of liquidity of stop losses, okay? Stop raids is another name for it. So this is kind of probably pretty advanced, pretty fast, but I hope I break it down simple enough to where you guys understand what they're doing and why they're doing it. So same thing with this here, what they're pretty much doing here. I actually caught this sell here off of this right here at this peak. and I'll actually show you guys what I was looking for, okay? I missed this entry here because originally I wanted them to come up here in order for them to sell. So I was looking for like this more or less for them for in order to sell. Oops. So I was looking for this area to be reached and up here and then sell off. But as you see, they didn't do that. They created what we just spoke upon here in order to push the market back down. But after we had this drop, I knew that we should have a retest of an area that's equal to the same type of idea with this here. Oops, excuse me. And what we'll do is normally when they have this last move up, they'll come back into this move in order to be an area of a reentry. Okay. Order blocks or smart money cubes, whatever you want to call them, are normally an area of stutter or stagnant price. So as you see here, the price is stagnant. As you see here, like the price is, um, this area price is stagnant. So market's kind of moving sideways. There's just different areas where you'll see it, but pretty much what I was playing off of is this, because normally what they'll do, as we just spoke, the last move up before the drop is where to the left, they'll have the retest, as you want to call it, or just the re-entry of that. So if we move this way here, you can see how that directly matches up to where they came into right here. But also here, with this area in general is just consolidation. So they broke the consolidation. This is the retest of consolidation. But most people probably would have looked at, let me see, most people probably would have looked at possibly, let's see, it's gonna be on a lower time frame. So they probably looked at this here, this bottom, to be the support. So retail trading would have been something like this, to where they probably sold at this area. Okay. And then they might have just had their stop loss above this previous area here, because technically this is the high before the low was broken here to sell down. But that's what they're expecting for you to do. They're expecting for retail traders just to only want to come here, because this is technically the break of the last support, and they want to look for the retest here. Now, if we go down to the 5 minute, we're more than likely going to see a rejection to where most people sold, like right here. So you see right here, right there, where these two are at right here. Give me 1 second, guys, and we'll go back. Where these two candles start to print here, this is probably where they probably came directly over and started selling. But then, like I said, what they like to do is they like to create an opportunity for you to think that in order for them to take the stop loss that you probably put in. So we're going to go back to that area, which is going to be pretty much this here. 1 second. It's pretty much going to be here. So you see how this pattern here, they probably faked people out with these here in order for them to, so right here, the entry, and then you have the same type of entry here. And so where they probably just, most people probably sold, and that's their stop loss. But they just came a little bit higher in order to really, run people's stop losses and then move the market. It's not too crazy. I mean, it's just something that you have to get used to watching. So now being that this is here, for an example, and we move this way, my next area of interest would obviously be the next imbalance, which is going to be within this area here. As you can see, price is yet to be really fulfilled in after this move of downness. So this technically here is an area of imbalance here. You can even see this on the 1 hour. It's pretty valid, pretty simple. On the 1 hour, it's even bigger here. So on the 1 hour, this could be an area where they come into in order to sell again. Now, the reason why I say that is because we'll see the same type of action occur. Now, they're not always the same, but you can see here, look, you have a bearish to a bullish fake out to a bearish move. So this here, this order block would be my area of kind of interest of selling like this. So I'd probably look into here to sell. Although they don't have to come back to that, just as they didn't come back to this, they can ultimately, like we spoke in the beginning of this, they could just be wanting to come to here first and leaving these areas of open imbalance for the reason for them to come back this way upwards towards the bullishness up here aspect. And that's just kind of how, you kind of just look at the market as, okay, well, my best area of interest is going to be up here to sell. And if they don't come up here, then I simply have to just wait until I see my next opportunity. It's not too crazy, complicated. It does a little bit more advanced than the basic stuff that is, taught on YouTube and things of that sort. Um, I'm not a big, I do understand Wyckoff. So they do have something as like the spring, the UTAD, which is pretty much the low taking of this, the spring of the, newer high. So the next highest high that's higher than this previous high, and then the retest, and then the actual move like this starts to form this way. Okay. I don't necessarily know the full actual schematics. I know a little bit of it, but by knowing just something as this to where they're gonna do double bottoms, take the bottoms, and then they're gonna do a higher high, retest. This is what I'm looking for. I'm looking for the liquidity to be taken in order to make the lower, to take the liquidity in order to break higher. So in the opposite way, with the sell, what you're gonna do is an M, and then you're gonna take liquidity, and then you're gonna break lower, and then you have the retest, then you're gonna have them move this way, and then you should look like this. They can do something like this. It doesn't matter what necessarily the actual pattern looks like. It's just understanding that revertility, or just in general, they're gonna look for oops, hold on. They're gonna look for areas of purposely made liquidity in order for you to sell or buy, and then be able to come back into that. So let's say this is an imbalance here, and then they come into here eventually to sell off again. This would be valid because technically price was left open here purposely for people to sell here, for them to come back up here in order to sell off. So necessarily knowing the schematics and understanding them are very beautiful, understanding them. But for me, it's simply, knowing the pattern that I'm looking for. And by that, my patterns that I play pretty consistently are going to be an M, and then the high taking, and then the break of the lower low, the retest of this previous liquidity being taken as an entry to sell off here. Same thing for the W. It's going to be here, here, the break to take liquidity, the break of structure, the retest of the previous liquidity that was here in order to make the move higher. And we can look at right here something easy of that sort. Okay. Give me 1 second. Let me kind of just get rid of a lot of this stuff. And we're going to look at some of those of what I'm talking about right now. Okay. So first one being that's pretty obvious is going to be, I like this one here. Okay, maybe not. I like this one because I caught this one originally the other day. Last week, I believe, when it started. So just give me 1 second to zoom in. But as we see here, this isn't the nicest example of that, but you will see it form as the same thing as I'm talking about. Okay. So what we have here is we have a higher high, and then we have a higher low, higher high, and then we have that move, and then we have the break above it. Then we have the break below it in order to equal the previous liquidity here in order to sell down. This one isn't as nice as I would like. I would like something that's a little bit more full of a break of structure. So for an example, this over here would be a nicer one for me. I really like this one a lot more, and you'll see where it kind of does what I want it to do. So you see here how they have a higher high, higher low, they have consolidation, then they take the high, and they make a low, and then they have the retest here. So this is what I'm talking about. So you see how so you see how here, this is kind of just movement. You can tell that it's, getting smaller and smaller, the price, but ultimately they have the shoulder, then they have the head, and then they have the break below previous structure here. Sorry, guys, I think my mouse is dying. But we have the break of structure here pretty much. Okay, so we have the lower low here with this. And then we have the market come back up here to take the liquidity that's probably in this area that was last sold off before we have the actual drop here. But once the drop's created, I'm looking for them to come back into this imbalance somewhere, or at least above these equal highs that were formed here before the next previous sell. And as you can see that they did come here and they sold off, but ultimately they came right back into this imbalance here before they made the move down. Okay, so this is the price action that I'm looking for, the move into the imbalance in order to sell here, which probably is where they came into a previous lower low or equal lows to actually clear out, more stop losses. So people probably bought here, and that's why they come here and here in order to take out their stop losses before they move up. Now, same thing goes with this here. They probably came back up above these equal highs that were created with these two candles in order to take the stop loss here before they actually continue to move down here. Now you can see it's kind of consolidating. It's just a range. But what's funny is this here on the higher time frame is just a whole bunch of accumulation. They're just accumulating orders. People don't know which way the direction is going. They have no idea of whether it's a bullish aspect or a bearish aspect until it really breaks this way. But what you can start to learn, and it does take time to see it. It doesn't happen overnight, and I'm still myself learning. You can see if I look in this area what they're doing. They're ultimately just creating consolidation from here to here, which also known as accumulation or distribution because they're distributing. Okay. I may have that incorrect. Like I said, I'm not the best person at Wyckoff. I just know how to kind of see it for what it is and understand it. Now, as you can see here, they have what they pretty much did here was people probably sold here thinking that these two here were the areas of sell, but before they sold it, they came here before they want to sell it. So even if the market does something like this, they go up and they just do this, and then they go here and then they sell. All this here was liquidity created. All this here was liquidity created in order for them to take it and then start the move of the cycle bearish. Okay. So you can see out here comes up and then they kind of just move sideways until they finally drop it. But understanding this final move of, okay, they took the highs and then they sold, they're moving in a low position is where you start to understand and learn it. I'm not the best. I still have a lot to learn, but I'm able to see, what they're doing. Okay. So yeah, that's kind of the basis of, being able to find imbalances. Like I said, imbalance of here, or we can look at equal tops that are formed before the imbalance is actually, are equal tops that are formed after the imbalance is left there. Oops, excuse me. And then now how to really look into order blocks, or as you want to call them, smart money cubes. There's so many different names for them, but understand that normally before they have a fake of a bullish move, they'll make the bearish move. Okay, so for here too, this is going to be an order block where the market is just stagnant here. So you'll see if I move this over here, this is going to be an area of where market either gets stuck to push higher, or they're going to have to break through to push lower. So now that I've seen that they've pushed lower through this order block, it gives me a good bias for them to come down to my ultimate destination here first. And like I said, they could go lower here somewhere, but ultimately, since they broke this order block, more than likely, I'm just looking for them to come back into this order block again, probably to sell this way. Now, you'll see within the 1 hour time frame where that order block is, I'll draw a line of a 50% of it. So probably halfway between this consolidation. And it's funny because that's exactly where the break of it to the retest of it creates to the breakdown to where now they can create the retest ultimately of this here, because this last candle here, half of that is probably going to be probably about like right here somewhere. So they might come into this here before they actually continue to move down. Like I said, this is in the imbalance area anyways. I'm more of a player at up here where these order blocks are in this area, but this isn't out of the picture in general because it's definitely playing to here. Now, like I said, they could, just continue to from here to move up bullishness, but I'm going to keep my bias towards them wanting to come down here first because to me, it makes more sense for them to finish this move out before they start this move up. Okay. But yeah, that's a little bit about smart money. Some imbalances, some double tops and double bottoms. Like I said, I don't really care for trend lines. For me, when trend lines occur, I'm more or less kind of skeptic of it like this. You can see how with EG, like I was looking for them to come in here. They didn't finish the imbalance, but they started to move this way. And ultimately they wanted to take this trend line out here with price here. Now, as you can see with this markup, I also have an area of equal tops here. So now that they're moving bullish, I might be more in the aspect of looking for them to come up here bullishness because they didn't want to necessarily close this last area. So I don't know. It's just possibly, having multiple ideas in order to move forth towards what your trade can be. Okay. And then the big thing for me, which a lot of people probably don't pay attention to, is timing. So if price comes into an area like this, for example, like we'll come to the 1 hour. So even though we have this trend line that's broken, we still do have this imbalance that was created within this here. So let's say tonight, I don't think they're going to come down here. I think they're just going to keep pushing up. But my point is like, let's say for London session, if market was to come like this here, and then London session opens and they're in this area here, then I'm going to look for the buy here in this area because they closed the previous imbalance to where I'm going to look for them to come up here somewhere, or at least ultimately this destination up here. But that's kind of how I, just kind of determine what I'm looking for. It does take time to find. It's not something, like I said, that you're going to find over a day. Some people do get it on quicker than others, but it is definitely time. But it does change your perspective on trading a lot. And especially if you can go from a 4-hour perspective or a daily perspective, and then break down to a 3-minute perspective of what they're really going to do. Okay. And then you'll start to just understand like why they're playing off of certain areas. But yeah. So I hope you guys got some great valuable information. I will be doing some more on this in a future. I actually want to go over a little bit more into understanding, how I guess you would say Wyckoff really moves. Like I said, I still want to get that down a little bit better of understanding, but ultimately, there's no perfect strategy. Really, for me, learning what your eye can see over time is where it's going to be. So like me, like I said, this here is my sell off move. This here is my buy off move. Okay, so this is what I'm looking for. Okay. But yeah, so I hope you guys have a wonderful, blessed day. Thank you. I appreciate it. Please give me a like and a subscribe. I greatly appreciate it. As I continue to do this, I would like to bring more and more value. And if you guys have time to drop a comment on maybe some questions or concerns you guys had about this, or some things, maybe I can answer or help you out, definitely do that for me. Okay. But